What if I told you that every country on Earth is in debt? Not because of bad leadership, not because of corruption, and not even because of overspending, but because the global financial system is designed, engineered, so that debt can never disappear. Here's the real mystery. If every country owes money, who is the creditor? Where does the debt go? And why does the world economy only function when nations owe more every year than the year before? Today, we're not talking about political talking points or economic myths. We're going to unravel the structure that makes permanent debt unavoidable. The hidden mechanisms governments don't explain, and the reason the world may be trapped in a system that cannot be escaped without a complete reset. This is the story of a machine built centuries ago, one that quietly dictates the rise and fall of nations. To understand why every country is in debt, we need to step back, way back, to a time when money wasn't numbers on screens, but gold, silver, and physical value that couldn't be printed at will. For thousands of years, kingdoms rose and fell on the strength of their treasure. Empires only spent what they had. Debt existed, but it was limited and temporary. Then, everything changed. In the early 1600s, European bankers, merchants, and governments created something revolutionary. Money backed not by gold, but by debt. The Dutch invented the first bond markets. The British built an empire on borrowing, and eventually, the idea spread across the world. Governments could borrow money not from kings, not from traders, but from private institutions created for the sole purpose of lending to them. These institutions evolved into what we now call central banks. But here's the twist. Central banks don't lend existing money. They create new money when they issue debt. Money becomes debt, and debt becomes money. The system we live in today is built on a simple formula. The more debt there is, the more money exists. So how can any country be debt-free in a world where money itself is debt? To understand this transformation, we need to look at the early 20th century, when the global financial world still operated under the gold standard. Every dollar, pound, or franc could be exchanged for gold, meaning governments couldn't spend more than their gold supply. But wars are expensive. Rebuilding nations is expensive. Running governments is expensive. Countries needed more money than their gold reserves allowed, so they did the only thing they could. They borrowed. After World War I and II, nations owed sums so large they could never realistically repay them. Debt wasn't a temporary emergency anymore. It was now a permanent feature of modern economies. By 1971, something happened that sealed the fate of the world's financial system. President Richard Nixon ended the gold standard forever. From that day on, money became completely untethered from physical value. Governments could print it. Banks could create it. Credit could expand infinitely. But here's the catch. Every new dollar enters the economy as debt. The world had crossed a one-way threshold. From now on, to grow, economies must borrow. To avoid collapse, they must borrow more next year. And to pay interest, they must borrow even more after that. Debt wasn't a burden anymore, it was the operating system. Once money was decoupled from gold, the floodgates opened. Between 1971 and today, global debt exploded from $1 trillion to over $300 trillion. That's a 300x increase. Why? Because the global economy, trade, investment, jobs, banks, markets only functions when credit expands. Debt became the fuel for government spending, infrastructure, social programs, military budgets, corporate growth, stock markets, housing markets, and consumer spending. Without debt, everything would freeze. But here's the dark truth, if you want to admit, debt must grow forever, or the system collapses. If debt growth stops, banks fail. If banks fail, businesses fail. If businesses fail, governments fail. And if governments fail, so does everything else. The entire world is addicted to credit. Now we reach the uncomfortable reality. Most countries cannot repay their debt. Ever. Not because they don't want to. Not because they spend recklessly. But because the system simply doesn't work without permanent debt. Countries don't pay debt. Off they roll it over. They refinance it. They borrow more to pay the interest on what they already owe. It's like a person paying one credit card with another, except this person is every nation on Earth. When the mountain of debt grows too tall, cracks up. Greece in 2010, Argentina repeatedly, Sri Lanka in 2022, Lebanon in 2019, and dozens of others. But even wealthy countries face a silent crisis. The U.S. debt is past $34 trillion. Japan's debt is over 260% of its GDP. European nations are drowning in long-term obligations they can never balance. The breaking point isn't a number, it's a moment when confidence collapses. And history shows confidence always collapses. Here comes the twist no one discusses publicly. Debt is not just a financial tool. It's a weapon. Countries with powerful currencies, especially the U.S., can borrow as much as they want with virtually no consequences. But developing nations, they borrow in currencies they can't print. They owe institutions they can't control. They pay interest rates they can't negotiate. Debt becomes a chain. It dictates what governments can spend on, what policies they adopt, what industries they prioritize, what resources they must sell, and who ultimately controls them. Debt has replaced military conquest as the primary method of global influence. The IMF, World Bank, and international bond markets don't to conquer nations. They simply own them through obligation. This is the part of the story that almost no textbook will ever teach you. Countries try to escape the cycle, but every attempt fails because the system is designed to resist change. They try printing more money, raising taxes, cutting spending, stimulating growth, borrowing from allies, and restructuring loans. But every solution only creates more debt. Why? Because fixing debt requires eliminating debt, yet eliminating debt crashes the money supply, triggers deflation, collapses markets, and destroys governments. It's a trap with no exit. Today's world mirrors every financial empire before collapse. Ancient Rome inflated its currency. The Ottoman Empire drowned in debt. The British Empire decayed under financial strain. The Soviet Union collapsed from unsustainable economic promises. Now we're seeing global patterns. Record inflation, exploding deficits, rising interest rates, bank failures, currency devaluation, and social unrest. History doesn't repeat, but it rhymes, and the rhythm is getting faster. So here are the 3 key takeaways. First, countries are in debt because the global financial system requires it. Money equals debt, and the more the world grows, the more it must borrow. Second, debt is now a tool of influence and control. Nations don't fall through warfare, fall through financial dependency. And third, the system cannot sustain infinite debt forever. A reset, whether intentional or forced, is only a matter of time. The warning is simple. We are living through the late stages of a system built centuries ago. A system that needs endless growth on a planet with limits. And when the math no longer works, nations don't reform, they break. If you want to understand the deeper forces shaping money, power, and the future of nations, subscribe to the channel. This is just the beginning. The truth is far bigger and far stranger than most people realize.